All right, guys, I wanted to talk about an important subject today, and it's one that I know that we are all curious about, and that is finding your next 10X stock there. Give you guys some tactical steps to kind of go at trying to find that next 10X stock because there's so much misinformation out there. There's so much buy this, do that, all these different games that everybody plays. And so I want to give you guys just the hard truth on how to actually find that. Unfortunately, videos like these right here that are much more educational don't do real well on YouTube here. So if you could just like the video, just to help the video get out to as many people as possible. That's why I don't do more of these educational style videos, because it just seems like nobody clicks on them. Everybody wants to know, where the price of, Palantir is going tomorrow, SoFi is going tomorrow, as opposed to learning some of these concepts and kind of preparing for what's next. This is actually kind of a video series that I've kind of decided to do for my group specifically, where we're going to kind of talk through a lot of concepts over the next few weeks, over the next few months, I guess, actually, here as we come into the Christmas break, about specific tactical things to do in order to find that next 10X stock. So I wanted to share that first video that I put out there to them with you guys as well. And I did extend the fall frenzy sale to today, just simply to give those of you guys an opportunity to, one, see the video, see exactly what we're all about there inside the group. But I know a few of you guys that kind of said, hey, Luke, I couldn't get it in time this weekend. Is it extended? Sure. We'll go ahead and do it right now. Get out the pinned comment down there. You get that along with 5 free courses, free coaching, just so much involved in the group, direct access to me. If you want to learn, if you're serious about learning and you want to learn with me, take advantage, learn that valuation, understand price targets. You want to do all that sort of stuff before the market turns, because we all know sooner or later it's going to happen. It's just part of the cycle of life. It's part of the stock market cycle. And I want you guys to be prepared. And that's exactly what I'm trying to do with my group, is get them prepared for a downturn. And then also, hey, whenever we're in that downturn, let's find that next Palantir. Let's find that next SoFi. Let's find the next NVIDIA or AMD or a lot of the other great stocks that a lot of our group members found. I didn't find those specifically. I don't buy chip stocks. We had other people that did. So I kind of want to prep everybody for that. And I kind of wanted to give you guys a little bit of that information right here as well. So that way, hopefully it helps you guys out. All right, guys. Well, I got a few notes there on my phone. I wanted to talk about finding your next 10X stock and kind of specifically some mindset things, some things you need to be doing, and then also kind of the type companies to look for in regards to that. Now, I'm saying this because I'm trying to prepare you guys for whenever we have the next downturn, to where you're really going to find a true 10X stock at a bargain price, right? Everybody's always looking for the next Palantir at $6. Well, you need 2 ingredients. You need an incredible company like Palantir, and you need an incredibly down market to where you get stupid low pricing, right? This is not the type market where we're going to get that sort of pricing. So although you might very well find the next Palantir, you might even be able to get it at a reasonable valuation. You're not going to be able to get it down to that cheap price. But we'll have cheaper prices in the future, especially for high growth names that are up and coming. The time will come. It always does. I don't know when, I don't know where, but I want you guys to be prepared for that, okay? So kind of got 4 notes here that I want to go over. And the first one is being patient, okay? And that right there is probably the hardest one, because everybody's 10Xing everything right now. Everything's popping off. All kinds of stocks are running and all kinds of different things. And everybody, you just feel left behind. And you've got to understand the game and understand, just be patient. This is the exact same feeling everybody had in 2021. And it was incredibly hard to sit on your hands and stack cash, or simply take the deal that's there, whether it's a boring stock like Google or Amazon or PayPal for some of us. It's incredibly hard to just nibble away at those type stocks whenever you're actively like, I want to find that next Palantir. And it feels like people are finding it everywhere. They're not. It's fool's gold. It's always fool's gold in these type of markets. Not saying you guys aren't finding gems, and there aren't some gems that some of you guys own, but you're going to get really good pricing here in a little while as the market corrects. So I'm not as concerned with that pricing and getting good pricing, but it requires patience. And you have to understand patience as an investor. There are times like 2022 where it was time to put all of your money in the market, sell grandma to buy stocks, right? That's what we were saying back then. There's times like that. And then there's times like right now and like 2021 where there's some good buys out there. There's some really good deals, but it's not 2022. It is not time to, go all in and do all this other silliness, because you're going to miss the AI wave and all this goofy stuff that's out there. So patience is the first key that you've got to learn with investing. And that's not just to the downside, guys. That's not just waiting for things to drop. That's also waiting for some things to run as well. I could not tell you how many folks, even right here in our group, that left, that sold Palantir because they were just tired of waiting it to go. And it just seems like it can never get over $20. So they sold and they moved on to something else, right? Because you were down on PayPal or Palantir, excuse me. I can't get PayPal in my head. You were down on Palantir for a long time. Even last year, Last year, guys, you could buy it for $20 a share. There was a lot of folks that threw in the towel then. And look at what they missed out on by throwing in that towel, by not being patient, not understanding what they own, and understanding sometimes Wall Street gets stupid. Same exact thing with AMD. It was advanced money destroyer forever here in the group. And then now it's just rocketed up. Finally, some things clicked right for it. When those things happen, we can't control that sort of thing. All you can control is the business executing underneath or not? And eventually the fundamentals always catch up, or the stock price always catches up to the fundamentals in those cases like that. SoFi, same exact thing, heard the same exact thing, saw folks selling out of it to move over into the hot stock of the day, and they missed out on an easy triple up in SoFi or more, depending upon what their average was in SoFi. So that's kind of the first thing you have to do, is you have to be patient. Now, next up, you need to be consistent. Consistency is the next piece, whether that's consistent with your DCA, whether that's consistently trying to find ways to save money in your budget, whether that's consistently working on your side hustle, working those extra hours, whether that's consistently doing your due diligence like you're supposed to and not cheating that work because your stocks are running good. And I looked at the headline numbers on SoFi. It looked pretty good. And I saw Luke's video and that was great. No, that's not the way you do deep due diligence, because during times like right now where it's very easy to be lazy and you still make money, you're not preparing for those times whenever you're down and you need high conviction, high understanding, and you need to understand your businesses on a high level during those down times. You can't wait until those times come to go, oh yeah, then I'll dig in more. No, by then your emotions have already tripped you all up and you won't have the confidence to do what you need to do. You can say, hey, Luke, that's not true. I'm different, whatever the case is. Maybe so. But having done this for a long time and seen it right here in this group, seen it in my real life, seen it out there with other investing partners, investing buddies and such, it is simply not how the world operates whenever the fear is high. You will inevitably fall back on your due diligence and what all you've seen. And if you haven't been doing that and you've been cheating the work and listening to somebody else or whatever the case is, that's going to be your default. And therefore, you're not going to be in a position to take advantage. Instead, you're going to be playing that fear game and all the other things that we talk about that you want to avoid. So please be consistent across the board with all sorts of things. Get better every week, every month, every single year in regards to your knowledge base. Be working on those money loops like we talk about all the time. Getting better, about being prudent with your finances. All those things like that all stack. It's all stackable stuff. It seems small right now, right? Hey, saving 20 bucks here and 20 bucks there seems small. Talk to somebody like me that's been doing that every single year for 20 plus years. And it makes a massive difference. Thousands upon thousands of dollars difference in my monthly budget. That is a lot of money left on the table by not taking those small habits, those small little wins, stacking those small bricks, early to create that late and being consistent throughout with all that sort of stuff. It's the same exact thing with dieting, right? You want to get in great shape. Well, nobody got in great shape yo-yoing, but yet that's what most people do, right? They're not consistent with their workouts. They're not consistent with their food. Or maybe they get consistent with their workouts, but then they're not consistent with their food, or vice versa. I've seen both those things happen. Or they're consistent for 6 months, but then they take 2 or 3 months off and then they come back to it. That's still the same exact thing. If you were consistent all the way throughout, it tends to stack. Therefore, you tend to just get in better shape over time. Your diet gets cleaner, working out. And even if you have a setback of some sort, an injury, get sick, whatever the case is, it's very easy to build back up because you've already stacked bricks that are already there. It's just putting them back in place versus somebody who hasn't stacked them in the first place. So being consistent is key to not only finding that next 10X stock, but then being able to consistently buy it, being able to consistently identify when it's overvalued, undervalued, and keeping yourself out of trouble with those type names, because they do tend to be high beta and they run up real big and then they come down and then they run back up again. Hey, you don't have to play those games if you're being consistent and prudent with your investing. Next up is share count, and understanding that share count is what matters the most. Do not get stuck in those games of, I got a really low average in the stock and I don't want to average up. Guys, that's silly talk. You hopefully in your investing career, which, let's just say you're my age, you got 35 more years or more of investing to go. So over the course of 35 years, I'm consistently going to be putting money to work. And I know share count is what matters whenever you own a great company. I would not have nearly as much money I had if I would not have continued to put money into Apple, despite my initial shares, making 7 figures. Okay, great. But if I wouldn't have bought them, 3 years later and continued to buy it throughout time, over the course of the past 20 plus years, my portfolio size would be much smaller because I wouldn't own nearly as many shares of a great stock. Now, I'm not telling you overpaying, but this is why DCAing is so incredibly hard to beat over the long run, because you are increasing your share count. Therefore, somebody else might very well have a pretty average. That's only good for your ego and your taxes. That's it. It does no good. Otherwise, I'd much rather own 10,000 shares of a great stock than 1,000 shares of a great stock, but at a really low average, because the numbers work out in the favor of the person that has more shares over time. So understanding that dynamic keeps me from trading in and out, because the moment I trade out, now I've got to not only get in cheaper, I've got to try to increase that share count again, as opposed to, all right, let me focus elsewhere, stack some cash, and then come in and buy more shares whenever it gets undervalued again, and continue to stack those shares. Again, you notice a theme here, stacking. All these things all stack together to where the beauty of compounding, if you haven't done the lesson yet, do it. Pennies to millions. There in the stock course there. It is an incredibly eye-opening lesson in regards to how compounding works and why it is the eighth wonder of the world, or whatever the heck the quote was, because it truly is. Your numbers start off small right here, but whenever it starts to compound over time, you're making your salary in a few days in some cases, depending upon how much you've compounded over time. It's an incredible, amazing feat, but it starts off small, being consistent, all those things we just talked about, but understanding that share count also helps with that compounding as well, especially if you're prudently buying, especially since you're probably into bonus shares at that stage. You're just prudently buying undervalued shares, stacking up that share count, knowing that 5 years from now, 10 years from now, if you're my age, 35 years from now, you're going to have a lot more money during that time to do what you need to do, take care of health expenses as you get older, whatever the case is. The point being, keeping share count and understanding share count is what matters, not your average, not anything else. Overall, in general, the math shows share count and stacking that up matters. And of course, the final thing, and this is kind of more focused towards the type of stock you want to look at, right? So we worked on ourselves in regards to mentality, thought processes, mindsets, things of that nature. And then of course, strategy, share count, just stack the shares, stack the shares, stack the shares. Okay, let's talk about now, hey, I want to buy a particular stock. What type stock should I be looking for that next 10X stock, whatever the case is? And I'll tell you guys, don't make the mistake that a lot of folks did of spreading their money evenly, wanting a 10X in a stock, right? But then thinking you're going to get a 10X out of PayPal the same exact way you might have gotten a 10X out of Palantir. I'm talking about back, 2 years ago. Or PayPal obviously wasn't speculative, but they were right in the middle of a turnaround that you didn't know if they could turn the business around or not. We didn't know that. So that makes it kind of speculative. And then of course, Palantir being in the speculative stage at that time, can they turn a profit? Can they get more consistent? Is this, product really going to take off out there in the market? Some other things of that nature that made it very, very speculative. So not all stocks are created equal. So looking at a stock like PayPal doesn't make any sense if you're searching for that style stock, okay? Neither does buying Coca-Cola, or even some of my favorites like Apple or an Amazon or something like that. Amazon might very well 10X on us one day, but it's going to be a long road to go. Okay. Now I'm not telling you guys to speculate on high beta trash that's out there right now either. What I'm telling you is what key things that I'm looking for in that type stock. Whenever I'm looking for that next 10X stock, I am not looking for what I see in Amazon whenever it got undervalued, or Meta whenever it got crazy, stupid undervalued. That's not what I'm looking for. Granted, we're not quite there yet. Going to end up with a 10X on Meta during that time. But generally speaking, that's not the type of business I'm looking for. However, I'm looking for two main things: fundamentals and a product that they are pushing into the future, or that is a future product. That is something that is leading edge, something that has a big TAM to it that hasn't really been tapped yet. That, using Palantir as an example, that's exactly what I saw. I saw fundamental execution underneath. If you were paying attention to the free cash flow, you saw it all over the place right there. It's the biggest thing that tripped them up, because the numbers seemed inconsistent unless you paid attention to the free cash flow. And it was just the way they chose to do their accounting. That's all that it was. But if you paid attention to that, instead of going down all the different rabbit holes of Alex banging the table, or stock-based compensation, or all this other crap that was out there, and you simply watched their free cash flow and went, there it is right there. That's telling me they have fundamentals underneath driving the business consistently, quarter in and quarter out. And then of course, nobody knew AI was like the future, but I knew this product was something that is absolutely something that everybody's going to need and want in the future, as everybody's striving to get more and more efficient. Obviously, when you speak to large companies, or any company, especially 3, 4, 5 years ago, it was everybody has all this data and they don't know what to do with it. And so everybody's hand jamming everything into these crazy spreadsheets, these crazy, all this ridiculous stuff, trying to get the best data. And the companies that were best at that still weren't that great overall in regards to that. So obviously seeing Palantir having something to where, hey, if they can get in there and they can solve the government's, information issues, and some of the other, issues that all, the nasty bureaucracy is there. If you've ever worked in the defense sector before, or in the government sector at all, you understand how old those systems are, how none of them talk to any of them. There's just so many different hindrances. If they're able to solve that, imagine what they can do for a great business that has some capital and flexibility in order to shift and move and change. So clearly it was easy to see for me, fundamentals and a future product that could very well be a hit. Now, of course, you never know whether something's really going to be a hit or not, but you could very clear as day see there's a giant market for that. Massive, massive market for that. Not a, oh, we think everybody's going to want this in their house one day, or, oh, the world will eventually go to that. I'm talking something right now tangible that you could offer to companies, more importantly, who have to get more efficient or else they die. That's the reality of that situation. Not a nice to have, not a, could be. I'm talking something to where everybody has to have that. It is critical, and it was something that they could provide. And of course, they were executing to it more importantly. Now, you got to watch it over time, right? The next 10X stock doesn't normally, buy it and then it 10X's, a few months later. That's not normally how that works. Palantir's case, buying it in 2022, 2023, 2024. Obviously, it finally rocketed up there at the end of 2024 into the stratosphere where we're at right now. And that was a confluence of a lot of different things that happened during that time. I didn't expect a 10X this fast, much less an 18X or whatever the heck we have in this stock at this stage. Who freaking knows? It's kind of ridiculous at that stage. However, back then, what I was looking for was fundamentals mixed in with the future. Now, obviously, we got some of those calls wrong, right? 3D printing. It seemed like it could be the future. It made a heck of a lot of sense from a manufacturing standpoint. Turned out not necessarily to be the case. Thankfully, if you were paying attention to the fundamentals, weren't adding nearly as much there as we were with Palantir because you weren't seeing the fundamental performance underneath. They had some fundamentals, but they weren't improving at the rate that Palantirs were improving. Therefore, they earned more money. Same exact thing with SoFi. I could clearly see as day, hey, they got a unique niche, right? They're definitely going after a consumer that is underserved by the big banks, because I understand banking on a high level. I knew those big banks don't even want those customers. So I knew that they were underserved. And then the most important piece, along with being that future and having a TAM there that they can definitely tap into, I also saw those fundamentals underneath there, getting closer and closer to profitability, seeing a management team promise one thing on earnings and then delivering on the next earnings, or if they said it was going to be 2 earnings from now or a year from now, executing that year from now right on target and better than expected. More importantly, consistently, those fundamentals were improving and smashing it and smashing it and smashing it and smashing it, making it very, very easy to continue to just load up shares and buy shares of that stock. Now, we're not quite on a, no, I mean, you're not really on a 10X yet with SoFi, but we're definitely well on our way to a 10X in that stock as well. If they continue to perform over the next couple of years, I definitely think we'll see a 10X in that stock. For those of us that were in it really, really early, you're definitely going to see that sooner rather than later. So that's kind of my initial take, kind of an initial broad stroke look at, to me, the keys to finding that next 10X stock. So, and remember, if you want to be a part of our group where we talk about stuff like this every single day, jump on live Q&As with me, get your free courses, get your free coaching, be able to talk to me directly in my DMs or on our live Q&As, get almost daily videos. I try to do 3, 4, 5 a week for you guys. Obviously, we do earnings calls live. There's so much involved in the group. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.